Hello everyone, my name is Kaseem. Welcome to the channel. So in today's video, we are going to talk about my top stocks. In fact, we're going to talk about my top 14 growth stock for 2022. And I believe these stocks are also good to counteract inflation as well. Okay. So like I always say in every single video, most of my video is for educational purposes. I try to put a lot of information in my videos that can educate people, so we all can learn how to invest and let our money grow over time. As you guys see on the channel, like I've done that. That's what I've been doing with my money, and I've been trying to grow my money steadily over time. So you know, I try to look for things that can help my money grow. Okay. And as you guys may know, basically we have a lot of contradiction right now that is contradicting the Federal Reserve. The Federal Reserve is in charge of the monetary policy of America, right? And basically they're saying inflation is transitory for a while, meaning that because of everything that we're going through, inflation is something that is going to be temporary. But more and more, we're seeing that inflation is not going to be temporary. So what we need to do is, well, what I'm trying to do is invest in companies that have the ability to raise their prices, right? Companies that have recurring revenue, like they're not stuck to say, oh, I'm charging $10 and $10 is it forever. I want to invest in companies that, okay, if it's $10 today and things gets expensive for them, and you know they need to make more money, they can raise the prices of their product or services, and you know they can make money that way. So what is inflation? Before we get started, this video is basically talking about inflation and also talking about companies that I believe that they will do well during times of high inflation. A lot of people always talk about, you know, we're going to a high inflation. I don't really think we're going to see a hyperinflation where prices are constantly going up. This is America. You know, it's hard for that to happen. Not like it's never happened before or it can't happen. But, you know, we have a lot of companies whereby they deflationary in nature as well, you know, because of the scale that they have. But before we get into all those things, let's just have a general talk of what inflation is. Basically, inflation is the increases of goods and services over time. Now, the Federal Reserve, they basically saying that they want to maintain 2%. I mean, I think it's more like 3 to 3.5% in general, because I mean, when was the last time you didn't see an increase in your rent? When was the last time you didn't see an increase in your gas price or groceries when you go buy things? And now, you know, we're seeing, you know, gas prices go up. That means everything that we buy in the store will also go up. That means our electricity bill will go up. That means everything else will go up. If gas prices, especially gas prices, if that one goes up, it's like a snowball effect, because everything we do nowadays, you need gas to be able to get it done. Whether that is, if you're going to Home Depot, trucks need gas to get there. So gas, to me, I try to keep an eye on gas prices because it indicates a lot of things, you know. So let's just get a quick definition of what inflation is.
Inflation is the increase in prices of goods or services over time. Dan just got paid and needs to buy groceries. Dan heads to the grocery store and loads up his cart with the items that he needs. These items cost Dan a total of $100. A year later, Dan returns to the grocery store with $100 to purchase the same items. However, now the same items cost $105 and Dan is forced to remove an item from his cart. Dan has experienced the effects of a 5% inflation rate. Dan must pay $5 extra to purchase the same items that cost $100 only a year ago. Inflation leads to higher prices and lower purchasing power. It's usually a monetary phenomenon caused by a country printing more money than is justified by the country's wealth. When more dollars are issued for a limited amount of assets, the value of each dollar is decreased. Many countries' central banks set an inflation rate target of 2 to 3% per year.
So now that we have a little bit of an idea of what inflation is, now life still have to move on. We still have to move on, even though things are getting more expensive. One of the ways, there's two ways that we can combat inflation. Trying to make more money one way or the other. If you can try to make more money, you have more money in your pocket, and you won't feel inflation much. Prices of things going up, you won't feel it much. You can try to do that. You can try to move to a cheaper location. If you're working online and your location is not tied down to one place, you can try to move to a cheaper location. So that way, you reduce your expenses on a monthly basis, so you don't feel the price of inflation. So there's a lot of little things that you can do to try to reduce the effect of inflation. And I think over time that will be good for your pocket. But obviously those are drastic moves. If you just move from one place to another, it's pretty drastic. So the other thing that we can do is just allow things, trying to make more money. If you can do that, if you can't, get more hours where you work, one of them will work out. I'm an optimist. The next thing is, where do we invest our money? The little savings that we have that we're trying to save, where do we invest it that it would grow, based off of the fact that things are going up in prices? So let's get into some of that in today's video. So for the sake of not making the video too long, what we're going to do is we are going to talk about the top 6 or so of the top companies, the top 14 companies that I'm looking to put money in to counteract the effect of inflation in 2022. Okay, so we're going to talk about the top 6 and some of the key attributes where I think that those companies will do well over time. And you can apply the same theme. You can apply it to the other to the rest of the stocks that we're going to look at. But the first one that we're going to talk about today, you guys probably can guess it already. We are going to talk about Tesla. The reason why I think Tesla is a great inflation hedge is that Tesla is reducing their debt. Okay, and during high times of inflation, you want to reduce your debt. You don't want to owe a lot of money. Even us too, we can apply it to ourselves. Like when there's a recession or anything like that, you don't want to owe a lot of people money. You don't want to have a lot of credit cards. If you lose your job and you don't have any money coming in and you have all these bills, that's a lot of headache. And then on top of everything, prices of goods and services are going up. You don't want to have that. So in case of Tesla, what Tesla have done is they've been reducing their debt. They've been reducing their debt, the money that they owe. They don't owe a lot of people a lot of money. Their case is companies. Let me look at this annually and let's take a look at their debt here. They don't owe a lot of people money. They're making money. So if you take a quick look here, you can see that Tesla's debt is slowly right here. It's slowly reducing with a graph. If you take a look at an annual basis, you can see that slowly is this year. You guys can see that this graph is a little bit higher than this one. Is this year that they reduced their debt. And if I find a better chart while I'm editing this video, I'm going to put it right in front of the video so we can get visual views of how the company is reducing their debt. So if you also take a quick look here, you can see that all the basic metrics for the company is doing so well. Take a quick look at these numbers. You guys see right here, the revenue is up. The revenue is up almost 30% this year. The net income is up 183%. Their net profit margin is up like crazy. Operating income, the total income that they're bringing in from operation, that one is up like mad. You guys look at these percentages. Net change in cash, that means the cash the differences between their cash, that one is going up. All right, so their cash on hand, cash that they have available, that one is also up 200%. you know, cost of revenue, cost of revenue, that one is up a little bit. You know, they got to spend money to make money. So like all the numbers looks quite nice. It looks very good with Tesla, and I think over time they are going to do just fine, and the company would grow as well. Okay, Tesla is not a company that I think people should ignore. It's a very strong company that is growing very, very fast, and I think over time a lot of the investors are going to be greatly rewarded. Even when the stock is down, it don't ever bother me. We'll do the updates the next time, but when the stock is down, it don't ever bother me, even though it's down today. But I keep on dollar cost averaging, and when it goes down significantly and hits, you know, big moving averages, you know, the 50, the 100, 200 day moving average, I use that as a buying opportunity and buy a little bit of the stock, because the numbers, all the numbers looks good. The debt is going down. Everything just looks great. The next company that we're going to look at is Google. Okay. Google is a great company. Okay. You guys are watching this right here on Google products. Google is a great company. They have a lot of products. They have the ability to increase the amount of money that they charge, even on the advertising side, on the creator side, on so many fronts. They have a lot of money that they have a lot of leverage to increase price. Even though Google is one of those stocks where I need a little bit more. I missed the boat on this stock, to be honest. So as it's going down now, I'm gonna be racking up and getting a little bit more. I don't have much of this stock, but it's also one of my stocks that I'm gonna keep an eye on it for next year, just because the company is so massive. And same thing with Tesla, they have a ton of money on hand. If you take a quick look here, look at the revenue. This is all the revenue across all the ways that they make money. Obviously, they made money on ad, they make money on search, YouTube ad again, Google Network membership. So that's your, you know, all the membership that you pay. Google Cloud, they make money on that. All the Google service, all the other services, you know, like, and then they also have the hedging business. Like, look at this. Their income stream is so diverse. They have all this source of income, diverse, and they make billions of dollars. Let's see how much this is in total. In total, this is an annual revenue of $182 billion that this one company makes. So I think as the stock gets cheaper and is going down, it's a great idea to be able to pick a little bit of this company up, because the company has the ability to be able to make $182 billion. And, you know, as the internet grow, this company will grow. It's just mad the amount of money this company makes. They make a lot of money, and I think over time, these companies too will grow very, very nicely. Look at their net income after their operations, total money that they bring in after they spend. They pay YouTubers, they pay whoever they pay, the operation to host the cloud, to do everything. After that, they bring in on an annual basis. You know, this is 2020 so far. They bring in $40 billion. $40 billion. And the next thing I want to look at is obviously their debt. This is not a completely detailed video that I want to do here. I just want to look at their basic numbers. So here they have, you know, operating expenses, which is 56 billion. So they have to spend a lot of money to make this money, but they make this amount of money, $40 billion on an annual basis. So when it comes to Google in terms of debt, the debt is holding steady. You know, they have $28 billion of total debt. It's holding pretty steady. You know, but they basically net cash positive right now. You know, like the total debt that they have right here, it's really, really low. You know, so that is a good thing for me. You know, I like to invest in companies that have low debt. Even though they have a high total liabilities, but you got to also look at the total asset minus that from their liabilities to be able to see how much a company is really worth. But you know, look at here. This is the asset section right here. Look at the assets growing slowly over time. They have a total assets of $360 billion. This company in like maybe another 10-15 years, they will have maybe 1 trillion. Oh, this is a quarterly number. Let's take a look at annually here. This annually, you know, $332 billion, you know, annually. And then looking at this on an annual basis, the debt is going up. But if you would take a look at the total asset minus, you know, their liability is relatively low. Okay. So that is that. Let's take a look at the next one. So the next stock that we're going to take a look at right now is going to be Apple. That's my third pick. Okay. Apple is a company that we know and love. Most of us, we use Apple products. I use Apple products. Most of all the equipment that I use for this channel is basically Apple products. And you know, like, this is the current holdings. I have another one in the Warren Buffett section of the portfolio, but I have roughly about $6,000 in Apple, and you know, it's done well so far. You know, the company has gained 160%. They're working on self-driving cars as well. They're working on VR headset for the metaverse. They all, you know, Apple constantly work on the next thing, the next generation thing. You know, AirPods, the way we know it today, was not a thing before they came out with their iPhone. You know, and you know, this company is a really, really good company to hold, and to just, if things gets expensive, Apple has the ability to raise their price. Because look at the amount of money that we all pay for their phones. Either you pay on a monthly basis or you buy it outright. You pay a lot of money for their stuff, and people buy their stuff. Think about how many influencers are there all over the world that they all use Apple stuff. All the latest Apple stuff that comes out, they all use it. How many MacBook Apple sells every year? Apple is a giant of a business. Obviously, this is the biggest company right now, but the company is pushing really close right here. I want to talk about the market cap here. Really pushing to $3 trillion, and I think, you know, over the next 15 years, the company could easily be pushing up to either 3 to 5 trillion based on all the things that they're doing. If they come out with a self-driving car, and that's the next biggest project in my opinion. If they come out with these self-driving cars and that becomes as successful as I think Apple can make it be, even though, you know, when it comes to all these things, anybody that is involved with self-driving or electric cars, they're gonna be paying homage to Tesla. That's what it is. They're paying rent to Tesla. But Apple as a whole, I think it's gonna grow over time. You know. So really quickly here, look at this. Okay, look at the chart. Just admire the growth of their revenues, the total money that they bring in. Look at this and admire this. It's pretty much only Apple that is able to do this year over year. That they're able to grow their revenue to $365 billion every year. Amazing numbers. Okay. Companies are able to do this, they can last a long time. Look at the net revenue here. This is the net income, their profit, net income, net money that comes in. Look at this. Let's see, almost $95 billion on an annual basis. Just from one company, profits $95 billion. You know, and Apple has the ability to raise prices. You know, their expenses goes up because obviously they will do R&D. You see, they spend a lot of money on R&D. so their expenses will go up over time. But for me, I look at this money as asset, because if you're investing in products, you're investing in something, and what you're investing in is gonna help you make a ton of money in the future. Then to me, that is an expense temporarily, but over time, it will increase their income. Look at this in 2009. In 2009, they made a total revenue of $42 billion. $42 billion. And coming up to 2021, they're getting close to $365 billion. This is a huge growth. Okay. So I think in the future, it's probably going to grow a lot more. It will be interesting to see how much it's going to grow to, but I think it's going to grow a lot more in the future. So let's take a look at their debt. So let's take a quick look here. This is their current debt. Now they have a lot of debt, but again, if you look at the total asset here, you can see their total asset is crossing, $400 billion in the total asset. And then if you look at the total debt, the debt is 136 billion. But this is a company, remember, this is a company that is bringing in almost $360 billion on a yearly basis. Last year they brought in 274. The previous year they brought in 260. Previous year they brought in 265. From here, you guys can see the COVID has been really, really good for Apple, and they've made a lot of money. So I think this will probably come down a little bit, and then we'll start seeing that nice and slow, steady growth in their total revenue. I think, everybody's staying home and working from home. They bought a lot of product from Apple. Look at this. From 274 billion to $365 billion. That is a huge difference. People spent a lot of money buying Apple products. So if we look at the debt here relative to the amount of money they make, to me, it's not really much, even though it's gone up a little bit, but interest rate is cheap. Companies that have stuff like this, then the total asset that they have is way higher than, their net debt here. And, their assets is also way higher than their liabilities. Look at this as well. Their share count, total share count is going down. And that's what you want, because the total shares that's available for people to buy, if that is going down, that means the shares that you have today, the value of it is going up. So, they also pay dividend. They are a big dividend payer. Let's take a quick look at the dividend. So if you take a quick look here on Seeking Alpha, you guys see that the dividend has grown slowly but surely. And this is every share you own, you earn this much dividend. And in 2021 so far is 22 cents. Every shares of Apple you own, you earn 22 cents every 3 months. So you guys can see that their dividend history the dividend payout history has been going up over time. With a company that is making this much money and they have basically less debt, I think over time they are going to do just fine. And on top of everything, it's only Apple that can do this. Their share count is also reducing here. So this is a great situation for investors to be in. And I think over time, the company is going to do just fine, and they are going to grow some more. Like I said, my prediction over maybe the next 10 years is maybe they'll be worth $3 to $5 trillion in the next couple of years, because of they're getting into the metaverse. If they get successful with making the goggle, and people need a goggle to be able to do stuff in the virtual world, well, the people that are making the product to make that happen, they're going to be worth a lot of money, because they're going to sell a lot of the products. So you know how Apple does stuff, correct? They do stuff like luxury, and people just love their stuff. So I believe, you know, they're gonna do just fine. Just check on Google. There's a ton of tech stuff or tech channels that have to do with just Apple alone. So, and not to talk about influencers that buy their products. They buy all their products, edit their video, they buy their phones, they buy a lot of things from Apple. So they make a lot of money, and they're gonna be just fine in times of high inflation. So that is it for that section there. I don't want the video to be too long, just 20 minutes, nice and sweet. Stay tuned. I'm gonna work on the next video. The next video is gonna come after this one, so stay tuned for that. Thank you for watching. I appreciate you for watching. Give the video a like, appreciate you for that, and give the video a sub, appreciate you for that. Until next time, which will be real soon. See you later. Love you all. Bye.